So, Firefly Aerospace just dropped its very first earnings report as a public company. And wow, let's just say the market's reaction was not great. Today, we're going to break down that report, the absolute cliff dive the stock took, and what it all means for this brand new space stock. All right, let's get into it. Yeah, get this. In just one day after that report came out, the stock tanked more than 15%. Now, a drop that steep, especially on your first time out, it just makes you ask the question, what in the world did they say to send investors running for the hills? And maybe more importantly, was it a total overreaction?
Okay, to really get what happened, we've got to start with the headline numbers. This is the stuff that flashes across the screen and makes the trading algorithms go wild. It's the first impression.
And, well, on the surface, these numbers are not pretty. Their official earnings per share came in at a loss of $5.78. The analysts, they were expecting a loss of just 44 cents. I mean, that's not just a miss, that's a huge miss. Revenue also came up short at just over $15.5 million. For your public debut, a double miss like this is pretty much the worst first impression you could possibly make. But here's where things get interesting, where the story starts to change. Even though that top-line revenue was down, their gross profit, it actually went up year over year. So how does that even happen? Well, turns out it was a really high-margin modification on their Blue Ghost Mission 2 contract. And this right here is our first big clue that maybe, just maybe, the headlines aren't telling us the whole story.
Okay, so that brings us to section 2. Let's flip the script and look at the story management wants you to focus on. They basically spent the entire earnings call pivoting away from the messy quarter and pointing towards their long-term strategic picture.
And the absolute centerpiece of their entire argument is this number right here, $1.3 billion. That's their contract backlog. And look, this isn't some pie-in-the-sky projection. This is real signed business from heavy hitters like NASA and the Department of Defense. So management's message was super clear. Hey, don't worry about the choppy quarterly numbers. Look at the massive pipeline we've already locked down.
And this backlog isn't just sitting there. It's growing, thanks to some major wins. They snagged another huge NASA lunar contract. And this is a big one. Their Alpha rocket got the green light from the FAA to fly again after that little mishap back in April. They also got a $50 million strategic investment from Northrop Grumman to work on their next rocket, Eclipse. Plus, they opened up the European market and even tacked on an extra $10 million of high-margin work to a mission that was already done. You see, every single one of these wins makes their future look a little more certain, a little less risky.
So what you have here is this classic Wall Street showdown. It's a battle between two completely different narratives, and they're fighting for control of this stock story. In one corner, you've got the market's reaction, and it is laser-focused on the short-term fears, right? The earnings miss, the big loss, and just the general riskiness of the rocket business. But in the other corner, you have the company's management. They're telling everyone to ignore all that noise and look at the real prize, that giant backlog and all the strategic wins they've been racking up. All right, so that brings us to the next call. This is where we step in and give you our analyst's take. What does all this mean, and how should we be thinking about this stock going forward? Let's get right back to that question we started with. After digging into everything, the good, the bad, and the ugly, was that massive 15% haircut really the right move? Our reading on this is market perform, and here's what that really means. We think the sell-off was definitely an overreaction to what's essentially old news. But, and this is a big but, the pressure is now squarely on the company to deliver. The long-term potential here is massive, you can't deny it, but the near-term risks are just as real. This is what we call a classic show-me story. They've got to prove it. So here's how we see it playing out. First, everything, and I mean everything, is now riding on the next Alpha launch, Flight 7. It has to fly, and it has to be a success. It's a credibility test, plain and simple. Second, the numbers you should be watching aren't the quarterly profits. Nope. You should be watching how quickly they turn that backlog into actual revenue and what kind of progress they're making on that new Eclipse rocket. And third, you got to remember that $1.3 billion backlog, it's a powerful safety net. It gives them a lot of breathing room to handle a bumpy quarter or two. All right, now for the fun part. Let's put on our hedge fund analyst hat for a second. We're going to pitch you what we call the outrageous but plausible trade. The thesis is simple. The market freaked out and punished the stock way too hard for one bumpy and frankly not very telling quarter. The play? You could think about picking up some shares if it stays weak, say below that $42 level.
Now, the catalyst that makes this all work is a flawless Alpha Flight 7 launch. If they nail that launch, you could see confidence come flooding back, potentially pushing the stock right back up to where it was before earnings, around $49. And the risk, it's all about execution. If that launch gets delayed again, or worse, if it fails, well, this whole trade idea is out the window, and it would make people seriously question if that amazing long-term story can actually come true.
And as always, this is not financial advice.